Hello and welcome. We are coming to you from the sidelines of the JPMorgan India conference, and we're going to talk about payments. It's an exciting subject, lots of interest here in India, new business models all around. I have with me Takis Georgakopoulos. He's the global head of payments. He's also the member of the operating committee at JPMorgan. Takis, great to have you with us here. It's a pleasure. Thanks very much. Tell us, what's been the experience of the conference so far? You're meeting investors, you're meeting companies, I assume. What do they want to know? What are the kind of questions you're getting? What's the feedback?
We are seeing investors, we are seeing a lot of the local tech companies, we are seeing a lot also of the US and European multinationals that do business here. And for me, it's my first visit in India post-COVID. And what I see is really a sea change in investor sentiment about India. It's extremely positive, it's extremely bullish. Then there is a whole kind of ecosystem of technology and innovation that I see for the first time in the country. Someone gave me the stat, I don't know if it's true, I heard it in the room. In 2019, you had maybe 1,000 startups. Today, you have 100,000 startups. I don't know if it's true, but again, it's a sign of how much more, how many more interesting things are happening here. So it's great to be here.
Where is India in the payments ecosystem, in the evolution of payments vis-a-vis other countries? Are we far ahead? Are we right up there? I mean, that's essentially what we believe, but you tell us.
Yeah, you are. And as I said, coming here from 2019, it's a big change, right? Yeah. So UPI before was, a little bit of a theory. Now it's real and it's everywhere, including in, the stands, people buying stuff for 5 rupees. So it is here. It works really, really well. We've seen the digital adoption being really strong. And what I really like and I find very thoughtful is how you guys started from creating the first layer, which is digital identity, then building payments on top of that, and then building credit on top of that. So I think the way you've done it is quite interesting. It's quite unique. It is government built, but with a lot of private sector support. And from what I've seen in the last couple of days, it also supports a lot of tech and fintech innovation on top of it. So I think it's a very unique model. Maybe Brazil is pretty close, but you guys are up there.
I mean, digital public infrastructure, starting with Aadhaar, UPI, and now, of course, there is ONDC, which is, of course, coming up. But why is this being replicated in other parts of the world as you see it, when you've got a bird's eye view?
Yeah, the problem with payments is it's very, very local, right? So I would say the country closest to India is probably China, both in terms of size and the moves towards digitalization. It's just in China it happened with private companies, right? It was WeChat and Alibaba that started it. And then the ECNY, the CBDC from China, came in to provide a public network as a resilience and an alternative to that. In India, you actually started with the public infrastructure and then the private innovation on top of that. If you go to the developed markets, we have digital currency, like, no one walks around with cash in Europe or the US, but you don't have the same innovation around digital identity and digital payments, nor do you have the same cost structure as the one that you are creating here.
And the cost structure is what is very interesting, but it's also, I don't know, a bit of a pain point for companies trying to make money off payments here in India. So, tell us, is payments on the B2C side, which you and I kind of use every day with UPI and private companies and their services built on the layer of UPI, is it going to be profitable by itself, or you think companies essentially will have to do other things?
Yeah, so fortunately, my business, JPMorgan Payments, we are in the wholesale business. So we do a lot of B2B payments. We move $10 trillion every day across 120 currencies and 160 countries. So there is always a little bit of margin to be made when you move money in complicated ways, big volumes, etc. When you come in a retail context, like in India, and then payments are free, that, by the way, is not, the free is probably rare and kind of unique to India, but everywhere you see the payment for core infrastructure continues to go down, which increases the barriers to entry, increases the necessary efficiencies. That's why we all invest in the cloud and AI and ML and all of those things to reduce our cost base. But when it is free, you need to think of new revenue streams and new ways to add value to your clients. So my view is, if you want to survive in the payment space, you need to move upstream. You need to think about software as a service, data as a service, UI, UX. How do you add value to your clients? How do you add biometrics, better security, better customer experience? better integration to the kinds of ways in which they use their payments, and be able to charge for that value, not wait to charge for the payment rails, because that seems to be
at zero.
Zero.
I mean, thankfully for the consumer.
Thankfully for the consumer, thankfully for the merchant, not so much for whoever provides the infrastructure.